Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linden Associates with your agriculture update for this Wednesday, the 10th of May, 2017, and we're now pushing the 140 time frame. Well, take a look at the grains because they were everywhere today. You saw the bean market go from the high to the low. The USDA reports came out, and as we've all been expecting, we were looking for a shift out of corn acreage into soybean acreage. Well, the government is saying that did occur, but what they did is if you first looked at the numbers, they showed less soybean production. And the market takes off on that initially, goes to the high of the day, and I think as traders parsed through the numbers, they realized that what the government has done is the government said, you know, yes, last year was super high yields. We're not going to give it that much of a yield this year, and that created the less production. Well, the market's thinking that through and going, maybe the government's not right, and the market comes roaring back down. A crazy market, and you get that now, and you're going to get that type of action from now probably through July as the crops get in the ground. We're going to hear reports as to how they're doing, how many acres are planted, blah, blah, blah. We go through this every year, and one of the things you want to pay attention to at this time of the year is seasonality. I'll talk about that as we start finishing this up, but for grain traders, I think it's important that you understand seasonality, and we have a way to help you with that down the road here. So let's take a look at the soybean chart because it is important. The market made the highest high off its bounce from 929 3/4 on a weekly chart. So you came down from 1080, 929 3/4, got up to 980, still $1 under that high, and closed lower so far for the week. The word is lower. It's only midweek. We have 2 more days left. I don't know how the week's going to end up, and you're only down $0.0125. When you look at the area chart of only closes, you still have that pattern of 975 down to this low. You bounced up, did not take out that number. And the low right here, by the way, is 964 3/4. So you're still caught between that 10-cent area on a closing basis. When you go to a daily bar chart, you can see how the market came up. Well, is today a failure day or not? We don't know. Should the market take out this 964 area right through here? Yeah, I think traders will look at that as a failure zone. But if the market can regroup itself right in here, they'll scratch their heads and go like this. Well, what do we have? So what you don't want to see is taking out 963 1/4. If you do, you keep the pattern of a higher high and a lower low then in place. Got it? And you're trying to get away from that pattern because it's a hard one to trade. What has happened is the market is showing you that the 18-day average of closes at 965 1/4 is acting as a support zone. The bias is up, but it can quickly give ground if you take out 963 1/4. In terms of Bollinger Bands, today's report blew right through the upper Bollinger Band for a very short period of time. And with that, bam, came slamming down as traders got a better handle on understanding the USDA numbers. In terms of momentum, it is pointing down. So if you believe that momentum leads price, you still have a market that is trying to point down. The bias is up because you're closed over the 18-day average, and there's no trend at all in the swing line. I have no idea what to do in a market like that. In the soybean meal, it's a similar pattern. Number one, it's a little more confusing because there's absolutely no bias in the slow stochastic. It's just drifting sideways. Prices today fell right back to that 18-day average. So here's something to understand. I want you to go back right here. Actually, it's right here. You do realize that almost from the end of the first part of April, every single day has hit the 18-day average closes. It didn't. It missed it by a tick or two. But take a look at that. You don't have a trend. You have a market that's continuing to churn itself right in that sideways Bollinger Band, which means when it does start trending, be it up or down, it's going to have a heck of a power with it. In the soybean oil market, you'd been overbought. Momentum is pointing down. It's now no longer overbought because both numbers are under 70. Today's break at 32.32 took out this low of 32.34. That leaves you with a higher high and a lower low pattern. And notice where the market's headed to, right to that 18-day average and trying to sit there. So the whole soybean complex, to me, is confused. When I look at the corn market, you rallied right back up, challenging the 100-day average of closes, and you had a good close out of this market. Looks like you're going to be up around 373 3/4. You have a pattern of lower highs, lower lows. That's bearish. Prices are over the 18-day average. That neutralizes it because the bias is up, and today momentum tried to turn up. So could this market be headed into what I think it might do is if it can exceed today's highs, maybe it makes a run to the upper Bollinger Band. I'm thinking the Bollinger Band top is going to define the upper boundary of the market, and maybe this 365 area is about all you can get out of it on the current break. The wheat market is still bearish. In a nutshell, the market is still saying to itself, okay, there's big crops. Now, you did have a key reversal day. Why is it a key? Because on this current break, that's the lowest low that you've had. You can call it an outside day. I use them, I interchange them all the time. But look where it stopped, still at the 18-day average of closes. Where the market could get very bearish is taking out today's lows. Remember what I teach, that if the market has an outside day up and you take out that day's lows within 2 trading sessions, I define that as a bull trap, and the market often goes to either one of the key moving averages or a Bollinger Band. Does it have to? No, but the probabilities are high that it makes a run for it. The sugar market today on the very close was high enough to lose its embedded reading. So it's a difficult market to be short unless the market regains that right away. What else do you look at on this chart? If I'm right, the market's going to fail again at the 18-day average of closes. Why? Because it's failed every time so far since then, going all the way back to February. All right? Now, let's assume that it decides to get through that number. Well, if it does and takes out 1649, then I'm going to make an argument that we're probably at an area where we're finding real value in the sugar market. But it's got to prove that it can do it. Until then, it is a market that, with the loss of the embedded reading, says it's going to make a run for that 18-day average, and decisions at that point are more likely to be made. Now, when we get to the coffee market, you have here 1, 2, 3, 4, almost 6 days in a row hitting this number, the 18-day average of closes. If prices get over 137.10, the risk in being long at that point is back under 134.80. Why? Because at that point you'll have confirmed higher lows, higher highs, you're in an uptrend, momentum's pointing higher. The risk would be to break that chart pattern getting under 134.80. If the market can rally further and gather momentum from there, possibly it makes a run up here. But you got to keep in mind, you're already at a 66 reading in the slow stochastics. I'm not saying you can't make that, but you're going to get overbought very quickly if you start up. In the cocoa market, you're already overbought. You're stalling at the upper Bollinger Band. The pattern remains one of a higher high and a lower low. No trend as I define trend. The bias is certainly up because you're over the 18-day average, but you are overbought. In the cotton market, today's report was not friendly cotton. And as you look at it, you can see lower lows, lower highs. Now, where did the market go? It finished the day at 76.49, which is right by the 100-day average of closes and under the lower Bollinger Band of 76.83 in an oversold condition. I would be surprised if we don't get a lot of short covering right there. There's no reason to be a buyer because the trend is down, but you're very oversold into major support, as I like to call it. In the cattle market, when you lose an embedded reading, prices often make a run for the 18-day average of closes. In this case, it's done it. Now, is it going to hit it? I wish I could tell you that it has to hit it. It doesn't. It's made its run. Whatever it's going to do here, it's going to do. It's got to restructure itself any way you go. The classic case was the feeder cattle. It too lost its embedded reading, and look at how it fell right back to that 18-day average and basically closed pretty much against it. What's the trend here? Well, I can define it as slightly down, in fact down because you closed under the 18-day average. The risk factors to go back, and you'd have to put a stop over 158.80. Forget it. Who's going to risk on a trade like that in the neighborhood of $4,000 a contract? Enjoy yourself. In the hog market, we're getting a correction, and that's okay. You closed unchanged yesterday. You're breaking down a bit. Remember, this was the first challenge of the market over the 100-day average. Those first challenges have a way of waning quickly. We'll see if that's the case. You do have the embedded reading, and until the red line closes under 80, the market stays bullish. Understand where it came from. To get involved means you're buying a 12-cent rally, and this is the very first correction. In fact, this is the first time we've had a day since back here in April. Think about this, almost mid-April, not just shy of that, where you didn't have a higher high day. Amazing market. I put it all together and try to figure out what to do seasonally with this. Grains are in a seasonal time frame. So what I go to are seasonal pattern charts. And why? Because crops go in the same time every year. We get different events. It could be good weather. It can be bad weather. It can be too much supply in the world, not enough supply, a strong dollar, a weak dollar. So you get what's called bull and bear years. The beauty of what the more research has, in my opinion, is not only do they allow you to see the seasonalities, but you can go in on their interactive charts. And you're going to be able to play with them and look at bull years, bear years, buy dates, out dates, where the market is. Understand this tool. And they've got spreads and regular. It is a tool. It is not because the market every year for the past out of 15 years, 13 of them at work, that you go in with that. In bear years and you get a buy signal that you haven't had in a number of years, you've got to treat it differently than you do in bear years or bull years. Back and forth flipping. Understand what you've got and play with their tools. So what do they give you? 2 weeks access to their website. You're going to be able to see all the spread trades. You're going to be able to see the regular trades for outright futures contracts. You're going to read the special reports that they've got in there, and it's all done here in their maps and their studies. This is very cool information. How do you get it? Well, you call us at 866-973-2077. You can go to our website at www.iraepstein.com. You'll see a carousel of free offers. It is up there. Just click it. The forms will appear. Fill them out. We'll get it to you. Click up here if you're looking at me on YouTube. Just click that icon. The form will appear there. And under us on many websites, all you need to do is say, it says, click here for Ira's free information. Do so. We'll put it in your hands. I'm Ira Epstein. Thanks for watching, and I'll see you later in my other videos.